Welcome to the Stage Analysis Members Weekend video. It's Sunday the 29th of May and we've got a lot to get through tonight. Apologies, it's a bit late for the members. I normally get this out in the middle of the afternoon Eastern Standard Time on a Sunday, but been a lot to go through this weekend. Such big moves across the entire market this week. There was out of the 104 industry groups, I think 103 were up this week. There was only one industry group that finished lower in a week, and the vast majority finished up by quite a lot. It was between 4 to 14%, I think, was the range of the group moves. So there wasn't many areas of weakness in the market this week. Even the top 10 weakest groups, the vast majority of those had 3 to 4% moves. So it was very, very strong week. So there was a lot to get through during the weekend watch lists and going through the different market breadth indicators that we look at. And I just wanted to obviously make sure I was covering everything off really this weekend. It's quite a pivotal week really, with an attempt to rebound in early stage 4 still in the market. But in terms of the breadth, we're very, very deep into stage 4. We're at levels we haven't seen since the 2020 lows and the 2018 lows. So basically, it's the indexes and the breadth are given a bit of a different picture, as the breadth suggests that we've had a much, much deeper stage 4 decline. And as we know, it's been going on for the vast majority of the last year in the NASDAQ composite stocks and the aggressive growth areas of the market, which topped out in around February 2021. So we're over a year into the decline in the breadth since then. So, which has, like I said, now got to extreme levels. Right. Anyway, let's start off with what we're gonna do tonight. So, I've got a few stage 2 breakout attempts this week. I just wanted to highlight on the weekly charts. I posted these earlier on in the day on the Twitter feed. There's about 4 or 5 different attempts to break out into stage 2. A few that have already been highlighted in the watch list multiple times, like Diana Shipping here, over the last few months. So I was going to start with that one and then get into the major index charts, the industry group relative strength tables and what's been going on there. The sector industry group bell curve, as that's had a big shift over the last week. It's obviously gone from extreme low levels and swung back up through the 30% level. So, and then I'm going to get onto the short term and long-term market breadth indicators. There's a few things to go through in there, as there's been some status changes going on in the breadth charts, especially in the short-term breadth charts. And before finishing off with the watch list stocks and a quick look back at the IPO stocks that I talked about in the midweek video. So for those, are just a quick review of what's happened since the midweek video. There's been a lot of strong moves in those ones. So I'll finish off with those at the end of the video after the watch list stocks. So at the bottom of the video, you'll be able to see the chapter. There's a bar goes along the video at the bottom of the video, and there's little dots. So if you're watching this on the Vimeo version and not on YouTube, you'll be able to see the different video chapters and go to the different sections that you want to go to. So first part of the video will be a preview section for non-members, and then we'll get into the members only content a bit further in. So I hope you enjoy. Right, let's begin with Diana Shipping. This has been highlighted multiple times over the last 2 or 3 months, starting early in March when it started to move up into back up towards the highs of the stage 3 range again, started to form this cup type pattern that was developing. We had a little bit of a cup and handle type pattern going on. So it started to come up in the watch list multiple times during this area here, as it got back above its 30-week moving average and started to consolidate in above it and forming a much shallower base pattern on the intraday. But this week has moved out to new highs again. So a new stage 2 breakout attempt on more than 2 times the average weekly volume. And you can see the relative strength versus the S&P 500. So this line here measures the relative strength versus the S&P 500. And we use a 52-week moving average on this, which is known as the zero line, as it comes from the original Mansfield relative strength indicator, which we used a flattened version of this, but I prefer to use the version without the flat line as the actual slope of the MA. It gives you a little bit of extra context of what's going on, and you get your best stage 2 breakouts once you're above a flattening or rising moving average. So if you get a move back earlier in here, if we get a breakout attempt down here, so suggest the relative strength line perked above in this area when you've still got a declining zero line, then at that point in there it's often too early, and you tend to be in an area where there's still a lot of time-based resistance or overhead resistance to work through. So it's much better if you get a stage 2 breakout that coincides with a move above the zero line once it's starting to flatten out or starting to move above. So in this one's case, it did break out a little bit early before it actually moved through the zero line, and then we got some secondary breakouts through the major part of the base structure back in this area here back in December 2020. And you can see the zero line started to flatten out and then started to push up as it moved off higher into stage 2. So again, a new stage 2 breakout attempt here. We've got from a 1 year stage 3 base. So potentially this could turn into an up thrust after distribution and roll back over. If you do start to see this drop back down into the range and it starts to break back down, then that would be potential for a short entry point. But obviously at the moment with the stage 2 breakout on the strong relative volume, we're looking for it to hold up above the top of this base structure up here. We want to see it hold up around the top area, start to chop around in this area, and then potentially move off to new highs again. So a little bit of a VCP pattern would be the ideal on that. Move on to another one, CAL. So this again, weekly chart on this. So I like to do the weekly charts when marking up for to do a thorough stage analysis on something. So we use a multiple time frame technique when using stage analysis. You don't just use the weekly charts or daily charts or intraday charts. It's basically using a combination of all of them to fine tune the entry points and to see where the various levels of resistance and support are and how the price action is actually interacting versus those different levels. So we start with the weekly chart. It's where we determine the major trend and where we determine the stage. But then the daily and the intraday charts then obviously give you additional information that then help you make that determination. So for example, in this case, we've got CAL, so CAL, we had a major stage 4 decline. You can see the deep bars on this one as it came down, massive selling climax at the bottom here, and then it had a apex type formation, bear flag, as it rose back up towards the declining 30-week moving average. As I said earlier, when you've still got the relative strength still below the declining zero line here, then it tends to be, even though that's had a huge move there, you can see it actually moved up from the low 257%, and it was still in stage 4 there. So you had a 250+% move in stage 4 from the low. So, and then at that point, you're still nowhere near stage 2. So it can depend. These kind of stocks can be very difficult when you've had a major stage 4 decline like that and you've had a sharp rally back up. So as I talked about on the midweek video with the members, sometimes when you get a big sharp move down like that and then you get a rally back up, you then start to form a higher base type pattern that then can break out into stage 2. So you actually get a higher base structure, and you sometimes get a spring type action in that as well and break out from there. So you can get this pattern quite a lot, and your stage 1 base doesn't actually start to form until you're up in this area up here. This area here where you get this initial bounce is still stage 4. And at that point, even though you've moved 100, 200%, you're still in stage 4. So don't be fooled into thinking that you're moving off into a stage 2 advance, as stage 4 can have volatile moves in both directions. And a good analogy that came up this week, which I think I mentioned on the midweek video, was that stage 4 is a bit like bouncing a basketball down a mountain. So you can have big reaction moves back the other way again. So it's not just a smooth roll down the hill. So keep that in mind when looking at that. Right, back to this anyway. The current move, we've had a big strong move this week with a local spring as a sign of strength bar. So this move here, we've engulfed literally the entire stage 3 range with a local spring within the range. We did have a spring type action back down here, so you can see we had a breakdown into stage 4, which for 3 weeks, which then attempted to reverse back up there as a spring, and then came back in with a higher low test there, and then back into the range. So we had a failed stage 4 breakdown attempt, which moved into a spring and test pattern. So that's known as a terminal shakeout when you have a failed breakdown like that. as it's a much deeper than a normal spring. When you only have a normal spring, you'll have your range, and then you might only break a tiny bit below and then start to pop back up again and form a higher low within. But when you break deep below the base and start to form below and then come back in, this is a spring number one type pattern, which is it's a much deeper failed breakdown attempt, and really flushes out the weak hands, which in this case obviously happened, and we've now moved back off towards the highs again. Again, this could still roll over here. We could still form an up thrust, roll back over and come back down into the range, and then you could potentially turn into a short, as that's a Wyckoff short entry point. But at the moment with this, what we'll be looking for is for this to make a continuation through to new highs and then hold above the range and start to form a new base before moving off to new highs again. So you can see obviously strong relative volume on this one this week, more than 2 times the average weekly volume by a long way there. So, and relative strength at new highs, potentially ahead of the price action. If we drop down into the daily chart, you can see we had 3 really strong days and a massive change of behavior here. Big gap up move here through. So that's your significant bar area. So you wouldn't want to see this come back down below the low of this at least, but ideally you want to see this consolidate in much higher area of the range now. Potentially it could form a handle type pattern, as this is obviously a big type of cut pattern. So you could chop around in this area for a while. Right, PALB. So this came up in the watch list midweek as we had a significant bar. So this broke out above the range. We had a significant bar move on Wednesday there, and then followed through on Thursday into Friday to make new highs. So breaking out into stage 2 on this one. So you can see the base structure that had been forming. It had undercut the 200-day moving average, and a little bit of spring type action within here. So this is a good example of fractal patterns within patterns. So you've got the broader base structure, as you can see, but you've actually formed, you can see this lower base pattern that's formed in here before the significant bar. So if you then drop down, if you see patterns like this, you can see this little range in here. So you've had a selling climax, automatic rally, secondary test, and then tested within the range, a little bit of spring type action, and then higher lows before breaking out. So if you zoom down to a lower time frame on this, you can then see that then formed as a stage 1 base, and then this was a stage 2 breakout attempt here. You can see it broke out into stage 2 on exceptionally strong relative volume. So that's how you can use the multiple time frame approach to get into these much earlier. As we now know, this is breaking out into stage 2 at new highs now up here, but as you can see, that little base structure was down here. So your intraday stage 2 breakout was down in this area in the mid 16s. So again, if we go back to that 2-hour time frame there, you can see that in here. So if you drop down to your 2-hour, your 1-hour time frame, when you can see that kind of price action forming, then you're looking for this massive strong volume breakout move here that engulfs the rest of the volume action. You can see there's a big dry up in volume in this area here, and then an acceleration to the upside as it broke out into stage 2. So at this point in here, that's a solid stage 2 breakout attempt on heavy volume, and then you can see the momentum that it's followed through in that. So that's a good example of using the multiple time frame analysis when looking for stage 2 breakouts. Another one attempting to move back into stage 2 is ULTA, which is Ulta Beauty. So you can see a potential for a new stage 2 breakout attempt. It's not quite got back to new highs here, so I marked this one up as well. You can see the stage 3 range that's been forming. It's had a few attempts to break down into stage 4, but again, little spring in this area. So it's little spring number 2 there, and then again a much stronger spring this week with an engulfing candle that's engulfed 4 weeks of price action here. You can see it's gone through all of that price action from the last month or so, and it's now pushing back up towards the highs again. And relative strength is at new highs ahead of the price action here. You can see this is at new highs, whereas this isn't. So a bit of a positive divergence in terms of the relative strength going on as well. So again, if we drop down on the daily, you can see there's been some urgent demand coming into this with gaps. 2 gaps and acceleration on the gaps as it moves straight back through the 200-day and the 50-day moving average back towards the top of the range here. So you can see, and then closed back above that. So we'd want to see this consolidate potentially in this upper range, start to move back out to new highs. And again, if you drop down onto the lower time frame on this, you can see it's now obviously gapped back up into stage 2 in here after an intraday stage 4 decline. So, LTHM, this is another one I wanted to highlight. This is from a group of stocks that have been coming up in the watch list for multiple months now, which is the Lithium group, a subgroup within the specialty chemicals, which again has been a strong area of the market over the last few months or so, and has come up in the watch list continuously in terms of the group themes. Although a lot of the groups, stocks in the group have been mainly in stage 3, they've been showing strong relative strength. And you can see here with this move, you can see that move over the last month or so has been exceptionally strong relative strength. And we had this significant bar following the earnings results in LTHM, and we had similar in ALB, which I'll show in a minute, and CC, which had been leading the group, moving off to new highs. So this has broken out from a lower structure within stage 3 here, which didn't break down into stage 4, has now moved back off and is potentially attempting to move back into stage 2 here, although it hasn't really committed to the upside yet, although it had a very, very strong week with a 21% move. So if we drop down onto the daily chart in this, again, you can see this broader sort of cup type pattern that's been forming. But cup patterns and stuff is not, I prefer to use the Wyckoff base structures when looking at things than cups horizontal structures versus that, to give you a much better idea of what's going on. So you can see the structure that's been forming here with some higher lows developing and then starting to break out. So this has been coming up consistently through this area in here in the watch list, and is now obviously moving off, attempting to move out into stage 2. So with that urgent demand on Friday and breaking out, we'd want to see this continue higher for a little bit and then potentially hold within the range before moving a little bit of VCP, potentially moving off up and out. If it can't obviously consolidate like that and comes back in, you'd want to see it hold above the top of the range before moving off up and out again. As if it starts to drop back down into the range again, if you see an immediate failure and it starts to come back into the range and starts to drop off, can't make it back above the previous highs, then potentially you could be into a potential area to short it, as obviously that would then be a failed breakout, which then turns it into an upthrust after distribution, so which is the opposite of a spring for those that understand what a spring is. ALB is the other one from the group, so this has been coming up as well, so very similar pattern on this. It hasn't yet moved off to new highs, it's still within its stage 3 range at the moment. So again, this kind of base structure that's been forming, you can see it's got a little bit of a cup type shape to it, but you can see the horizontal structures that have been forming. So if we zoom in to the daily chart on this, you can see those a little bit more clearly. We've had this level of interest, which it's finally broken through on Thursday and convincingly into Friday there. So we'd want to see this hold in the upper zone now and not drop back into the lower end of the market. If it does start to come back down into here again, that would be a sign of weakness and potentially could start rolling over and moving into back off to the downside towards the stage 4 breakdown level again. So we're looking for consolidation in the upper part of the range here, potentially for a cup and handle type pattern to form, which, like we said, coming out of a Wyckoff base type structure here, you've got a inverse head and shoulders within this as well. So looking for consolidation within this range before moving off to new highs. CC is the final one from the Lithium group that I was going to highlight today. Obviously, multiple Lithium stocks have been coming up in the watch list over the last month or so. And this one has been leading, moved off stage 2 4 weeks ago and has consolidated and then continued off to new highs in the last few weeks. So you can see the relative strength versus the market down here has been exceptional since the February low back here when it made a spring and then followed through back into the stage 3 range before then continuing off to new highs into stage 2 again. So this is a typical Wyckoff spring type action. You see a shakeout move at the lows as it attempts to break down into stage 4. So you can see, if we highlight here, we had the 1 week move into where it closed below the low here in stage 4 and then failed on the second week, reversed back up into the range with a spring and then followed back through some near term levels and back through some higher levels and then further. So continuous higher lows within the range, and this urgent price action as it's moved back up. So that's a typical spring type action when there's some strong demand coming in after a failure at a stage 4 breakdown attempt. So that was why this one has been featured so heavily in the watch list over the last few months or so, as it's been continuously showing better relative strength in the market and is now moving to new highs while the market is still developing below its 200-day moving average. So you can see much better relative strength by comparison. Another one I wanted to highlight, which is not a stage 2 breakout, we're still in stage 4. So I wanted to highlight a few of these kind of stocks because they're different to the stage 2 breakouts. There's a lot of stocks like this at the moment in terms of they've had stage 4 breakdowns, but they haven't got very far in stage 4 and are attempting to spring at the moment. They're attempting to recover. There's some obviously very oversold ones that have come a long way off. You've got your software type names that have come all the way down, given up their entire stage 4 base and are starting to base and are starting to pop back out again with small bases, but they are going to have a lot of overhead resistance to deal with as they come back into these kind of areas. Whereas you've got ones like ELF here, which has only had a minor stage 4 decline. It's only dropped, it has come back through a lot of its original stage 2, but there was a big move up through the stage 4, stage 1 area initially in this. So it's not given back more than probably 50% of this. If we go to the high here, what's that whole range there? So 77, so around just under 40, 39. So it's given around 50% of that move towards where it's formed this spring. You can see a big engulfing candle this week that again has engulfed. We've got 1, 2, 3, 4, 5 weeks of price action. It's taken over there. So really good weekly bar on that. So we'd want to see this now start to follow through back through the declining 30-week moving average before then potentially chopping and changing back above and below it and starting to form a stage 1 base for then potentially moving off and out back into stage 2. So it could be a while, but this is one way that you start to identify moves into early stage 1. And with a spring, sometimes they can have urgent demand that comes in, and they can obviously move immediately back towards the highs again very quickly, and you might sometimes bypass the stage 1 base. So that's something else you've got to be aware with these kind of patterns, as you could make a really strong sudden move back towards the highs again, and then it might need to then form a higher base structure then before moving out again. So anything can happen, obviously, but when you're dealing with moves like this, when you get a spring, obviously the purpose of a spring is that you're going to get urgent demand back towards the top of the base structure. In terms of at the moment, this is the base structure that we're talking about with that one. It's a smaller range. So if we drop down to the intraday time frame on this one again, maybe the 4 hour, you can see that base structure a little bit more clearly. So we've got the base structure here, we've got the spring type action at the moment. It's moving off in phase D of the base. So what you look for with a spring is for it to break out, make a stage 2 breakout, and then for it to hold above in the backup. And then this is a potential secondary entry point in the backup in the Wyckoff method, and then potentially moving off and out to new highs. And then you've got potential further continuation entry points as you start to move up and out, and the obviously moving averages start to move up with you. So that's the kind of thing you're looking for with these kind of with a spring. Again, you always need to consider the failure of the spring and what that can mean. If you get towards the top of the range here and then this starts to break out, we have a failed breakout attempt, it starts to move back in again, it makes a lower high and can't get back in again, then potentially you could form what's known as the UTAD, which is an up thrust after distribution. And so again, this is potential as you start to come back into the range again here, that's a potential early short entry point. And then you've got secondary entry points as it starts to move and break down again back into the range. So especially if it starts to move through the middle part of the range in here, if you start to come back through some levels, then obviously towards the lows, then it can get dangerous and can potentially move off into a stage 4 decline. As again, this is the opposite of the spring. So the urgent kind of demand that we look for in a spring, we look for the opposite for that on a up thrust after distribution. You get an urgent move to the downside, so it can be really, really quick. It can happen within a few days or so in some cases. So you've got to be aware to that when you see that kind of pattern. As a failed breakout can be a very, very strong short entry point, whereas obviously a failed breakdown can be a very, very strong long entry point. So they give you the opposites of both, and you can obviously have the entire trading method. You could just use springs and up thrusts if you wanted to. So I think it's a really, really, really strong area of the Wyckoff method. So I think it's worth obviously further investigation if you're interested in that. So we go back to this. Another one, HIBB, again, spring within the base structure. This is engulfing a couple of months worth of price action here, attempting to rebound back within here, but it is in stage 4 still. So this is a base structure within stage 4 below a still declining 30-week moving average here, just moving back above the 10-week moving average. You can see the relative strength has started to improve, but it's still below a declining zero line. So we've got overhead resistance to deal with. We're still below the stage 4 breakdown level. So again, this is a up thrust up here that you can see. So this had an up thrust after distribution. This is the urgent type of behavior that I was talking about. 2 weeks, it immediately smashed back down towards the bottom of the range before forming a weak bounce and then finally breaking down more convincingly, moving off into stage 4. So we've got the opposite to that now, spring type action in here. So we're looking for this potentially could consolidate in a higher range up here, or make a broader base structure and potentially start to move into stage 1 here. But with the urgent action, the 2 times weekly volume, this could obviously make a stronger move back up towards old resistance and then form a broader range. So just again, this is with these kind of moves, they can look at them on if you're swing trader, then they're obviously tradable in the short term on the intraday charts. So again, look down to the 2 or the 4 hour charts on the intraday. You can see your Wyckoff structure in here. You've got selling climax, automatic rally, secondary test. So it's your phase A area. You've got an up thrust in phase B, higher low in phase B, and then potentially now we've had a few more tests within phase B. And then we've had some spring type action in here. We started to break some levels with this sign of strength bar on strong relative volume, so which is now broken out of the range. So you can see it's not quite got very far out of the range yet. So we need to see this potentially make a little bit more progress, then potentially hold that base structure before moving up and out. So that's a potential scenario, which in there, again, on the backup, that's a potential area for a secondary entry point using the Wyckoff and the stage analysis method entry points. So this is how you can use the intraday charts to get into these kind of stocks earlier. So as I said, this is still in stage 4. So by no means is it in a entry point on the long side for an investor method entry point, as we enter in the stage 2 breakout using the investor method, and in the Wyckoff method you enter in phase C, which could potentially be here, but we look for phase on the weekly chart. We're looking for phase C within a stage 1 base, and because this is not a stage 1 base at the moment, it's just a base within stage 4, then we look for this to form a broader pattern and give more clues that you are actually moving back into stage 1, and this isn't just a redistribution base, which could make a continuation breakdown, as there's obviously still a lot of overhead resistance, and this is not yet in the right position in terms of relative strength. As I said, you need to start to see that flatten out. You need to see that start to move up, potentially start to hold, and then start to move out again. So that's HIBB.